You are watching Market Watch, the brief overview of the key events from the world of finance. Global stock markets posted notable gains following a temporary agreement between the US and China to reduce mutual tariffs for 90 days. The deal eased recession fears and spurred index growth. In the US, the S&P 500 rose by over 3%, and the Nasdaq by 4.3%. Despite the positive sentiment, analysts warn that many tariffs remain in place, and the effective U.S. tariff rate still exceeds levels seen at the end of 2024. Investors are now focusing on upcoming U.S. inflation data, which could influence the Federal Reserve's next policy steps. The trade agreement boosted the dollar while weakening other major currencies such as the yen and euro, both of which fell sharply in the previous session. Although the dollar slightly retreated against the yen and Swiss franc, it remained near its monthly high overall. The euro, British pound, Australian and New Zealand dollars showed only limited recovery and stayed below recent peaks. Analysts see the agreement as a major shift in U.S. trade policy and note reduced economic uncertainty. As a result, expectations for Fed rate cuts have declined, and U.S. Treasury yields have risen. Easing global tensions and remarks from ECB board member Isabel Schnabel have led markets to lower expectations for European central bank rate cuts. Schnabel warned of inflation risks potentially exceeding the ECB's 2% target. German 10-year bond yields hit a one-month high. Market expectations for the ECB deposit rate have risen, now projecting a 1.75% level by year-end, up from under 1.55% in April. The Bank of Japan remains optimistic about wage and price growth despite uncertainty caused by U.S. tariff policies. Deputy Governor Shinichi Uchida emphasized that Japan's tight labor market is likely to support wage increases, and companies may continue raising prices to offset growing labor and transportation costs. While the Bank of Japan kept its key rate at 0.5% during its April 30th to May 1st meeting and downgraded growth forecasts due to U.S. tariff impacts on exports, it has not ruled out resuming rate hikes. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.